what was that switch, right, to make you go from neuroscientist and doing everything over to real estate?
To real estate? Well, to get into real estate is when I started looking at our investments and tracking the market and looking, okay, the market did 8-9%, right? And I'm looking at all our investments and I'm like, almost everything in our investments were things we put in there, right? And I was like, well, this isn't much of this isn't growing.
Money. Yeah.
Right. And why am I not getting the returns that the general market was? And not just 401k, but just the stuff we put in cash as well and stuff. I was like, well, there's fees, all those hidden fees, and that's, I forget is it Bogle, the founder of Vanguard, right?
Okay.
One of his quotes is, compounding interest is a wonder of the world sort of thing, but also is the tyranny of compounding costs, right? And when you work out the math of how just like a 3% fee on a 8% return just crushes it, it.
Okay, what's it, like 60-70% of your 401k goes to fees or something over the lifetime of it? I heard things like that.
Yeah, it's brutal. It's brutal, it's sad.
Yeah.
And that's one of my biggest complaints about the traditional financial industry is the misalignment, right? That's why I love the private investments we do, because the investor comes first. We give them a preferred return. We don't make anything until they make a certain amount of money, then we share in profits after that. I'm like, that's alignment, know? Whereas
the better we do, the better you do.
Yeah. Traditional financial advisors they get fees for the products they sell you or something like that, or they get a fee for assets under management. So they get 2% of your $2 million they're managing for you or something. And if you lost money, they still get 2% of that year for what they manage. And they would argue that, well, two things. One is they can't control the market forces.
Right.
If that happens, so I'm like, but that that's how you're supposed to try to mitigate that. But they say, well, if we are production based, then we're not safely incentived, right? Well, then we're only going to shoot for the big winners. And I'm like,
be too aggressive.
That's on you. If you're too aggressive, right? I'm not going to work with you. You're going to have to figure that out. That's not my problem. Anyway.
Okay. So why real estate as that alternative investment?
It's a tangible physical item, right? It's you can insure it, right? It's never going to go to zero. Stocks can go to zero, right? I mean, it's paper. It's a paper asset.
Right.
Whereas I like a physical thing. It's tangible. It fits a need, right? That gets back into what we were talking about earlier, something with purpose, right? Most of our stuff is flipping apartment communities, right? We call it multifamily value add. But we also have a lending fund, and it's a feeder fund with our bigger partner, DLP Capital. But the point of it is, it helps create, and they focus on lending to people who are developing attainable housing, right? For workforce housing in the United States, right? And part of that criteria is to have rents that are below market, and they have different requirements for their borrowers for that. But they're rock stars. They've been running that fund for over 10 years. They have over $1 billion in assets under management in that fund alone, and it's something I'm super excited to be a part of, right? Because people want to do well while doing good, and that's a great opportunity for people to get their money. Super consistent, great returns that are without the volatility.
So did you start with single families and then move to multifamily, or did you start with like a syndication to get your feet warm and then go all in?
No,
as a syndicator?
I did the first. I did what most people do. It happened organically, right?
Okay.
I started small and scaling and
did
some wholesaling. Did some of that.
Tell us about that first couple of deals or whatever, because you're a neuroscientist, right? So you going from a neuroscientist to doing wholesaling, that's a big switch.
It was. A lot of those skill sets don't translate.
Right.
For sure. But some of them do, right? Being a numbers-based person, analytical, right? I could look up the traditional returns you expect on a property, just sticking to a single-family rental example. And for the viewers or listeners who don't know, the rule of thumb is like the 1% rule.
Yeah.
Yep.
Right? Which used to be the 2% rule back in the day. But
now there's like
a half, right?
Well, which is you want the monthly rent to be about 1% of the purchase price of the property. So if you buy a $200,000 house, you want to get about $2,000 a month rent. And that's hard to do in a lot of markets. That's why I went into other markets back in the day when I got some. And like some of my first ones were in Indianapolis, which were turnkey, right?
Okay.
Somebody already sort of flipped it in their system is to, they make money on the flip. They need people to buy their flips.
Right.
And they had a property management set up and stuff, so that was turnkey. It was really easy for me remotely, not having to find and manage a property manager, somebody who I liked and trusted already. So,
Okay. So you went from neuroscience, or you were still a neuroscientist, and then you said, "Hey, I'm gonna put some capital into these turnkey investments here in Indianapolis."
Sure.
Okay.
Sure.
I know there's some nuances.
Yeah, I did other stuff
yeah.
in there too, but yeah. So diversification, right? Try to get some real estate in the portfolio, and to feel it out, see what sort of returns I'm getting on those, and it doesn't take too long to realize how important screening is for tenants.
Yep.
Whether you have, I've had Section 8 tenants who the property managers said they vetted, and some have been good, some have been bad. Like, oh, don't worry, they're going to lose their voucher after they did that. I'm like, well, I don't care if they lose their voucher. I just lost $12,000 and I have to repair that house. But managing the manager is, for tax purposes, by the way, it doesn't count. But I think it's like I spent a lot of time doing that.